Good morning, ladies and gentlemen. Allow me to introduce you to Mathias Käsebier, who is the Senior Director for Manlik Pharma Consultants. Mathias has over 30 years of experience in OTC and consumer health, predominantly in strategic brand building, licensing, M&A and divestments. I suppose he will pick it up from here. I will introduce himself a little bit more and broader. I wish you to have a very good event.
Good morning, everybody. Welcome to Berlin and to Germany, to all the international travelers. And thank you, Jane, for the introduction. Yeah, it sounds like I'm an oldie with 30 years plus experience, and I hope I can still participate in the new discussion about digital and so on. And I will. And first of all, let me introduce you a little bit that you know my background. I have been with Dr. Wilmar Schwabe as a beginning for 5 years, then was with Boehringer Ingelheim in executive positions for 10 years, and then moved to the United States as a country manager for Heil Pharmaceuticals. And since 10 years, I'm now in various consulting roles, mostly in mergers and acquisitions as a sell-side or buy-side advisor. Now, I'm very glad and excited to have Thomas here. Thomas, I don't think I need to introduce his company, IQVIA. Everybody knows IQVIA, and Thomas is heading the consumer healthcare division there. And he's very busy this week, so we are very glad that he could make it. He was a little late to our dinner last night, but he was there. And Thomas will report the newest trends, the impact of pandemic and other crises we have, and give a certain outlook also on M&A. That's what I'm looking forward to. Thomas, it's your stage.
Yeah, thank you, Matthias, for the introduction, and good morning to everyone. Yeah, Matthias mentioned I do not have to introduce IQVIA to you, but we still need to work on the pronunciation, I think. So it's IQVIA. I think it has to do something with intelligence. That's what people told me, but it's more the combination of IMS Health and Quintiles, who were the two predecessor companies. Yeah. So let's start. So I think Matthias mentioned it. I think IQVIA is very well known in the industry. Maybe a few words about consumer health, the business unit that I am running in Germany. We are really dedicated and focusing on OTC and on all the other prescription-free products. And we try to serve our clients, how we say, from molecule to market or from concept to consumer, which means given that we have a very broad spectrum of capabilities, we're able to not only provide data and insights, this is what we are typically known for, but also many other services. So for example, in Germany, we have our own marketing agency who is running digital campaigns and marketing campaigns for OTC companies. Yeah, so as an example. So when I speak about the consumer health business, we are typically covering 4 different areas. So one is the over-the-counter medicines. So these are registered products, but prescription-free. Then we have personal care, which is basically dermocosmetics. We have patient care, which is an increasingly interesting space because it covers diagnostics, but also masks and other things. Which are very much demanded these days. And finally, nutrition. So in the slides, and of course, I've brought some numbers. I think if we have someone from IQVIA on stage, you want to see numbers or you're expecting numbers. The majority of the numbers that I will present are on the OTC market, because the OTC segment is the segment where we have the broadest coverage and where we have data from about 90 countries available. So let's have a look at the market development and how did the OTC market recover from the COVID crisis. And you can see we have very well recovered. So we are back on the trend after that dip in 2020, 2021, where we had for the first time I've looked at the numbers, and I'm now in the industry for more than 25 years. We've seen a negative growth. That's the first time ever, following the lockdowns and all the other impacts that we have seen. But now with a 13% growth, we are back on track to the historical growth trend in this industry, which also proves that it's a very solid and very healthy industry. When you look at the different categories, it's very obvious that this rebound of the OTC industry is very strongly linked to the rebound of the cough and cold category, which is called CCR here on the slide. More than 30% growth globally, especially driven by the strong Q4 last year and the first quarter this year. But you can also see that in many other areas, we've seen positive trends, maybe with the exception of skin treatment. Skin treatment includes also some products which are very high priced, and we can see here the first impacts of potentially the inflation, which is coming into the market. When you look at the leading companies, you see one clear leader, and the #1 spot is here covered by GSK Consumer Health, which is now called Haleon. So I will speak about Haleon in a second. But you can see that it's also a pretty unusual picture when we look at it. All the major OTC companies are showing significant growth, and most of them are even showing growth above the average of the entire industry. And that's quite unusual because many of these leading companies, like for example, Procter & Gamble, Reckitt Benckiser, have very strong cough and cold portfolios, which used to suffer in the past significantly, and now they are back to growth. So strong growth from the leading manufacturers. Yeah. One word about Haleon, you can see it here. So it started, GSK basically started this journey with the merger or the acquisition of the Novartis consumer health business back in 2015. They then acquired the business from Pfizer. And now they created a spin-off to separate the OTC business from the pharma business, obviously driven by the desire to create more shareholder value. We discussed that last night. Obviously, 2 stocks are sometimes more valuable than having 1 stock. But the idea is obviously to unleash the potential of both sides of the business. But it's also to recognize that the RX business and the OTC business follow very different rules. In the OTC business, we are, let's say, at the borderline between fast-moving consumer goods and drugs, whereas the RX business is really something which is very much clinical trial driven, etc., whereas the OTC industry follows, to a large extent, the rules of a fast-moving consumer goods market. Yeah. So one big trend that we are seeing, obviously, in the industry is the trend towards online. So what you can see here on the picture is the share, the increasing share of the e-pharmacies, how we call them, or e-commerce, versus the offline or brick-and-mortar pharmacies in a number of selected countries. And you can see that specifically in the US and in Germany, the online share is already very, very strong. So when I present at international conferences as a German, I usually have to explain why is the online share of in Germany so high. And I think there are a number of reasons, but one reason is that Germans are extremely price sensitive. So you all know Aldi and Lidl, the hard discounters, also maybe in other European markets. And also Germany has a strong legacy when it comes to mail order business. So we used to have fashion stores who are sending out catalogs where you can buy online for decades. Yeah, so there is a strong history in Germany of buying stuff online, plus price sensitivity. And that is, I think, the key driver for that picture. I think US is obviously always leading when it comes to digital trade and digital channels. But when you look at the right-hand side, you see significant growth rates, specifically in those countries where the online share has been pretty small in the past. So countries like Brazil, Italy, Poland, very strong growth, obviously fueled by the Corona crisis and the desire from consumers to avoid stationary pharmacies and to shop more online. So, but how will that continue? And we have just issued this week our latest forecast for the next years. And you can see here in the dotted line our previous forecast that we just submitted in June and the new forecast that we submitted this year, this week. And you can see that especially for 2022, we are seeing a significantly, or we are forecasting a significantly higher growth than what we originally expected, driven by the very strong rebound of the cough and cold season, but also driven by the high inflation rates that we are now observing. Yeah, so this is basically value growth, not necessarily volume growth. Yeah. And when you look at the forecast in a little bit more detail, when you look at the different regions that we are covering, you can see particularly high growth rates in those countries where inflation rates are pretty high. By the way, we have even excluded Venezuela from that chart because that would definitely disturb everything, yeah, with 1,000% inflation rate. And when you look at the different categories, we are seeing that strong growth in cough and cold, obviously, and we believe that there will be a, let's say, reasonable season, a solid season this year. But we also expect a normalization in the next years. I think cough and cold is extremely difficult to predict these days, because obviously the rise of new Omicron variants will play a role, which are very often treated with OTC medicines. Yeah, we are no longer speaking about COVID-19 as something which is very much causing death. It's very much something which can be treated with OTC medicines as well. So it has a very strong impact on the cough and cold category. But you can see that we are also forecasting very solid growth for the majority of the other OTC categories. Yeah, what are the key trends and challenges that we are seeing? We see basically 7 key trends for the consumer health market. So when you start at the top, we see that there is a need for accelerated innovation. You cannot survive in this very competitive environment without innovation. We've seen, and I've already spoke about it, that e-commerce is now a must-win channel. We are sitting here together on an M&A conference, so M&A is obviously always a topic in this industry, but we will also discuss maybe that I'm not super positive about M&A in the near future due to the higher interest rates. We will see that consumers and other stakeholders will need to be connected digitally. The consumer, the modern consumer, is more demanding than ever in receiving the appropriate information on time across multiple channels. We see that sustainability is now very much top of mind for many consumers. And we see that, for example, digital automation is very much a key trend going forward. Yeah, so this is maybe my last slide, which is maybe a little bit of a summary what we can expect going forward. So from my perspective, we are facing 3 major crises globally, and you can argue that there are many more crises. So we maybe an energy crisis or an inflation crisis, or we even had a toilet paper crisis in Germany. Some of you might remember. But all these crises are caused by one or more of these 3 major crises. So there are many knock-on effects from these 3 major crises, which are the climate challenge that we are facing, COVID-19, and obviously now the Ukraine war. And when you look at how does that impact consumers, pharmacists, and manufacturers, let's start with consumers. There's obviously what I already explained, an increasing focus on sustainability. But there is also an increasing impact from inflation. So we see a strong reduction in purchasing power, and we see a reduced demand for categories who do not have an immediate effect. Yeah, if you have pain, you obviously continue to buy a painkiller. But if you are buying a product which is more or less for prophylaxis and where you do not see an immediate or feel an immediate effect, this is something which you no longer have to buy if your income is getting your net income is becoming smaller and smaller. So also an impact on expensive products, and we are seeing the first signs in products who are very high priced, that the demand is going down, and that there is obviously an increasing trend to look into price search engines and to shop those very expensive products online just to save cost. On the pharmacist side, obviously we all are challenged with the lack of new talent in many industries, but that's also true for pharmacists who are not getting enough personnel. A lot of them are sick. Yeah, so pharmacists are really under pressure these days, and they are now feeling the impact of the shortage of products and all the supply chain issues. We see rising purchase costs. And the interesting thing is that I spoke to several pharmacists these days. Many of them are not passing on these price increases to the consumer, maybe because they feel that their consumers cannot really afford it and they do not want to lose more customers to the online pharmacies. But the other thing is that due to the lack of staff and other reasons, they are not able to change all the prices in the pharmacy. Yeah, they have to go around and you have to put new stickers on every product, and they say, okay, the prices of my purchase prices are going up, but I don't have the time to follow all these price increases from the industry. And on the manufacturer side, and I think we have predominantly manufacturers here in the room, obviously we see these supply chain disruptions, which go from aluminum for blisters to paper for the leaflets. Yeah, so many of you, I think, have issues in getting your supply chain ready. We obviously see the overall inflation impact, and we see obviously the loss of business in Ukraine and Russia. We have several companies here in Germany who have a very strong legacy business in Ukraine and Russia. Companies like Bionorica have about 1/3 of their business is in Ukraine and Russia, and this is now basically gone. So a dramatic impact on these companies. And as I mentioned before, obviously the higher interest rates that we are now faced with might have an impact on mergers and acquisitions going forward. So mergers and acquisitions, just a very quick overview. I think we see two different things here. One is what are the goals from large consumer health companies and what are the goals from mid-sized consumer health companies. You can see it on the slide. I don't have to read it. I think the more important piece is that our impression is that we will see a continuation of these so-called spin-offs from consumer health divisions. So a stronger separation from RX and OTC. And we will see maybe more targeted acquisitions by mid-sized players. Spoken to some of you already, and some of you are trying to create new portfolios, bring portfolios from one country to another, but also to get stronger in a specific indication or category. I think category leadership is absolutely key. And I think the time is gone where companies have tried to be active in every category. Yeah, we will see more focus in these acquisitions. And we see continuing investment from fast-moving consumer goods companies. So one good example is Nestle, for example, who have recently acquired Mucos, but now also acquired another company in Germany. So they are following a very strong acquisition path to strengthen the healthcare business, because from a Nestle perspective, OTC medicines are much more profitable than coffee or chocolate. Yeah. So I hope that was a first impression. I'm happy to follow the discussion and maybe answer any immediate questions that you want to raise. Thank you.
Thank you very much, Thomas, and perfectly on time. And
I trained a few times. So.
And we took some time away from you in the beginning. What we are doing, as Jane explained, we will have continued presentation. The next two speakers are therefore sitting already here, Alberto and Bruno, and then have a question and answer round for all these three presentations together. Very insightful. Thank you very much, Thomas, and much food for discussion. Again, also when we will hear the next presentation, this is Alberto Catizzone. I always have to look. Catizzone. Now I have it. Catizzone. Sorry.
No worries.
He's head of corporate consumer healthcare marketing at Menarini. Before he was at Boehringer Ingelheim, he was based in Dubai and was taking care of the Middle East markets, which I believe is not the easiest job and gives you quite a learning curve. And he has, as far as I understood, used this learning curve in internationalizing the Menarini portfolio to other affiliates. And he has found out what have many of us found out, OTC is not necessarily only TV. I leave it at this, and please, Alberto, your stage.
Thanks, Matthias. If you don't mind, I will stand up. Because, you know, some of the stereotypes about Italian are true, so we really need to move and to shake hands and everything, and I really feel more comfortable. So I don't think I need any further presentation about myself because Matthias did a great job. But I would like to start my presentation showing you the main feature of our company, of Menarini Group. So let's start from the very beginning. It was founded at the end of the 19th century, and its headquarters were established in Florence, moving them from Naples very early in the late century. So we are proudly Toscanian people with a very good mix of international talents in our corporate marketing team. Menarini is not only an Italian company, it's a multinational pharma company, as you all know. It's now present in more than 140 countries worldwide, with different kind of affiliates and distribution agreements. And our international path started with our very first foreign affiliate in 1964 in Spain. And I really like to remember two milestones after this very first step in the international markets. The very first one is in 1992. We are in Berlin and we purchased as a Menarini Group, Berlin Chemie Group, that is really well known not only in this area but in all the Eastern European countries. And another very important milestone was in 2011 when we built up our hub in Singapore. We are now responsible in Singapore, as many other pharmaceutical companies, for approximately 20 countries. And these are our key therapeutic areas. The main ones are oncology and RX pharma. It's important to focus on these two areas, and in my presentation, in the next few slides, I will explain you why. Then we do have consumer health, of course, diagnostic, and last but not least, dermaesthetics. Dermaesthetic was born in 2015 under Relife company brand name. But let's talk about consumer health, of course. Consumer healthcare business represent up to now 50% of the total turnover of the company. Two regions out of four represents 65% approximately of the total Menarini consumer healthcare business. And we do have 70% of regional brands. This is another very important information that I'll try to explain later how to handle this situation in our local affiliates. These are our core therapeutic areas. We started from multivitamins and then urinary well-being, gastrointestinal, and last but not least, sleep and mild anxiety. This was a segment, as you all know, that grew up a lot, especially during the pandemic period, these last 2.5 years, let me say. And the related brands, starting from Sustamin, Prostamol and Confimol in the urinary well-being, both for male and female target, Caledon, there is not only probiotic, and we will see also in my presentation an example about a new launch of under Caledon brand. Reflux Zero as an antacid, Lila and Ceramind in sleep and mild anxiety market. So how did we start? Mathias spoiled something, and it was right, because we start our journey in consumer healthcare with a pure DTC approach, direct to consumer. So we start investing money on media, mainly, a lot of money. And with several digital activities, more quantitative than qualitative, frankly speaking, with trade category and POS, point of sale visibility, and we started our e-commerce, both in-house and, of course, with external agreements with external suppliers and partners. This approach had very good advantage. At the very beginning, we had direct access to consumer. We succeeded to launch in a very quick way several new products in several different countries where we were not present yet. We increased in a very fast way our distribution and brand awareness, and we promote a lot of new cross-selling opportunities. But as we all know, this approach has also some, let me say, not negative, but not very positive side. Because of course, it has a very high financial cost and very low margins for our P&L. We had a lot of new internal complexities. As I told you at the very beginning, Menarini is mainly focused on oncology and RX pharma. So we come into the Menarini structure, and we propose them to change their mindset. Like one day from the night to the next day. So it was really complex also from our side. We stimulate our competitors. So our competitors that were silent in many markets, they tried to recover the gap that we created, and they increased their investment in terms of media. And we realized that it was really, really complex from our side to create a unique message. So how have we evolved? So we took a step back and we rethink about ourselves. And this was actually a very important passage for our corporate marketing team. So we create a sort of brainstorm, a sort of task force, and we based everything on three main pillars that I'm going to show you. The first one is our identity. Menarini has a high pharma expertise with a deep knowledge of the HCPs networks, GPs, specialists, pharmacists, on an international basis. And last but not least, we do have a widespread coverage on all our territories. Secondly, we start thinking about customers, no patients, no consumer customers. We focus everything about customers. So we build engagement with them. We created personalized value to our customers in order to be at the right place at the right time, in the right place at the right time. Last but not least, we created a startup approach. So in order to be flexible, to be quicker, to react even quicker, of course, we created this kind of very horizontal, let me say, approach in our strategies in order to emphasize our customer feedback. So let me show you what are now focusing in terms of business models, in terms of key models. Let me start with the OTX approach. Secondly, with the FTM, with the field trade marketing or marketeers. And last but not least, digital. Digital, now we saw also during Thomas' presentation, is huge. It's something that we really need to be there in the right way, in the right time. So let me start from the very beginning, OTX approach. So we created for the very first time in Menarini history, let me say a perfect match, a synergy with our RX medical reps. Please bear in mind that we do have more than 10,000 people on the field in many different markets, in many different regions. So we want to get GPs and specialists recommendation. And we train them, we train our people, we train our medical reps in a very specific way, creating some digital tools So we are not giving them only visual, because we know that visuals are key, of course, but it's not the only way. And I would like to present you a very short example of this strategy. We launched at the very beginning of this year, Caledon IBS in Spain. You know that IBS market is pretty much fragmented in many, many different countries. But it has multiplied itself by only in Spain by 17 times in the last 5 years. So it's growing year after year, month after month. And both GPs and patients and customers are unsatisfied about their current treatment. So they are looking for something else, something more reliable, something more effective. They need to change their mind also in terms of approach to this kind of disease. And the base of the sufferers is huge, because 30% of the general population only in Spain is suffering about this kind of disease. So it's a very good opportunity. We created a digital platform from scratch. So we create a new way to involve GPs, not only presenting the product, not only presenting the details of the product, but we create an interactive digital platform that they could be presented by our medical reps in order to be listened in a more effective way. And it works, because up to now, our objective up to the end of this year, by the end of this year, of course, is more than 24,000 contacts. So we are covering 50% of the total population of GPs in Spain. That means that it's approximately 300% more of the current market leader in the market. And this was the reaction in terms of market share value. So we are growing month after month, and this means that our approach is now working, at least up to now in Spain. This was my first example. Let's switch from OTX to FTM. FTMs, we call it field trade marketeers, because they are responsible for sellout. So they present pharmacists, promotion, cross-selling activities, even visibility and categories activities. Of course, they are segmenting their high potential customers in order to present them in the more effective way. And I took the example of the Italian team, the field trade marketeers that we do have since the end of 2021, the very beginning of 2022 in Italy. And this is our structure now. We have one national manager, 5 coordinators on the field, and 17 FTMs. And these are the very first results that we had just got them because we received it at the end of August. We are now covering approximately 50% of the total population in terms of pharmacies in Italy. There are approximately 2,500 point of sales, but please bear in mind that these are the high potential ones. So we are dealing with very important pharmacies on the national territory. And the first results in terms of sellout market share, because of course we need to measure their performances, our FTM performances, is very good. We are only at the beginning, but it's still very good because our main brand in terms of mainly corporate brands, even if there is also Acqua di Silmone. Acqua di Silmone is a local, it's a national product, and it's a thermal water, it's nasal decongestant. Our market share in this point of sale are higher by 30% or 20% in comparison with the pharmacies out of this panel that are not covered by our FTM. So these are very important results up to now, of course. Last but not least, digital. Digital is key. We all know that, but our company use also consumer healthcare as the key in order to open and to access this world. Because our heritage in terms of RX, pharma, and oncology, of course, was not, I don't want to say prepared, but was not trained well in order to enter this world. We try to centralize all the activities. Not the most operative one, of course, because we couldn't do it. But we try to centralize all the most important digital activities in order to gather data, in order to analyze all the insights, of course, and in order to build up uniqueness. That is not easy in the digital market, in the digital world. Because as we saw also with Thomas at the very beginning of this morning, better decisions start always with better customer data. So, thanks. So we created from scratch a new CRM, a brand new CRM in-house. So we manage everything by ourselves. We created a new corporate excellence digital team. With all this data, we created more targeted and personalized digital campaigns, newsletter, website, etc. And we created, of course, an internal dashboard. We need to monitor this data constantly. And last but not least, we start using the Google Marketing Platform in order to be the complete owner of all our digital campaigns. We created, from the very beginning of this year, several new corporate websites with centralized cloud hosting in order to have higher security, lower cost, to optimize our investments, especially for our local affiliates, and to have a better user experience, loading time, and SEO. And in the last 3 months, the results are great because we increase our page view, we increase our average session duration, and we reduce our bounce rate. Of course, Prostamol represents one of our most important brands from a corporate point of view. So we needed to create something for our customer. And we create a chatbot, a urinary well-being platform with a chatbot. And this chatbot allows us to gather even more data about our direct consumers in this area. And we collected more than 40,000 conversations with this chatbot by different people, by different customers, with fully dedicated conversation on the product and with direct advice on the geographies, on the pharmacies, on the territory, of course, where those people can buy directly our product. This was my last example, and I will really thank you for your attention. Thanks.
Thank you, Alberto. As you see, especially in the digital age, you have even more possibilities outside of the TV, which I know some of the TV stations really are suffering because the pharma industry was one of the key investors in advertising spend. We have seen now the headquarter view of internationalizing a portfolio and making the marketing strategies for each country. Now we will hear from Bruno Mestre, who is the Business Unit Director, Consumer Health Division at Angelini in Portugal. We will hear the local view, how he tries to optimize his portfolio, and he will give you some tools he's using how to do so. Please, Bruno.
So thank you, Mathias. I will follow Alberto, again, much easier. So basically, I will start quickly with myself. Thank you for the introduction. Very simply, I've worked in both. I'm Bruno Martins. I've worked in both FMCG and OTC companies, both multinational and family-owned businesses. And I also did it a few years ago, 2 years experience, is building my own startup in consultancy and outsourcing in marketing and sales. Okay, so having this in mind, I've joined Angelini 2 years ago. Okay, talking a little bit more about Angelini. It is a company that exists for more than 100 years. It is owned by one single family for more than 100 years. It is right now in the 4th generation of the family, and it has a new CEO for the last 3.5 years, more or less, which has started a big change in the company. So we're moving more and more from a very regional company with big sales in Italy and not as big in the other countries into, as much as possible, a multinational company. So big investments have been made. We've bought, you probably know the brand Thermacare 2 years ago, and we continue to invest on the last years. So what do I bring? I bring somehow a reality check on the portfolio management. And why is that? Because this typically I will not present nothing that you don't know, so nothing new. So sorry for that, and trying to lower your expectations. So nothing new, but the thing is, both in Angelini and in other countries that I've worked for or with, I've seen several mistakes being made with regards to portfolio management, several. And again, I say, this is nothing new, okay? So why so many mistakes? And this is I believe the question. Why did we saw so many mistakes in so many companies? Somehow in the daily business, in our management, we tend to go after a specific new product that we just got and we really want to push it, and we deprioritize other big brands that we have, for instance. But there are many, many mistakes. Just to point some few of them, typically, and prior company, and even in Angelini, I saw this, lack of investment on star brands or sub-brands or even SKUs, launch of erratic new products, just a new product, amazing formulation, we just go for it, but it doesn't have any link with the existing portfolio. And then afterwards, sometimes we see sales below expectations. Also, creating new brands when in reality, we see that there are existing brands in the portfolio that could have served as a vehicle to launch that new brand. Sometimes focusing too much on market niches and missing out on very great market gaps. And finally, and probably this is one of the biggest, lack of portfolio vision, at least 3 to 5 years. And this is quite common, okay? So what do I bring? What basically it is, we at Angelini, we take the portfolio management very, very seriously, both from a local perspective and a global perspective or a corporate perspective, okay? And we have a 3-step, in Portugal, we have a 3-step approach to this that I would like to share with you. First, we do the access, we access the current portfolio, and we have an expression, which is really fall in love with a problem before we have the solution, okay? Really go into consumer data or market data or whatever data, but really fall in love with a problem, okay? But do not stick with it, okay? And then we need to move forward. Second, establish a vision and priorities for the next 3 to 5 years. And finally, really important, the plan and how you define the investment for that plan. So sharing with you first the assessment part. The assessment, quite important, is to assessing the portfolio regarding at least these 5 criteria. And within that, trying to find your star or star brand or star SKU. Very important. 1 criteria, critical mass. How big is that brand, that SKU? How much net sales does it have? And how much will you be able to reinvest over the years with that specific brand? Which is linked immediately with the 3rd point, distribution. If you have a very big brand, hopefully you'll have also significant distribution. And distribution is very simple. If you invest in television, as we spoke, and then you don't have sufficient distribution, you are basically throwing money into the garbage. Okay, there's a significant percentage of the investment that you do on television that doesn't reach anywhere because the product is not on the pharmacies or parapharmacies. So very important, searching for the stars, really to have critical mass, then distribution. Obviously, very important, profitability, because if it is really big and doesn't deliver, doesn't have sufficient profitability, then you don't do much with it. 4th, potential for growth. Really, if I will forced with more money, with more investment, will I be able to grow much more with it? And lastly, investment level. Because am I really investing on my star brand the money that I should versus all the other brands or not? And this particularly, I saw it both in Angelini and on my prior company very immediately. And I can tell you, on one of those, the biggest SKU has a huge critical mass, huge monster distribution, close to 100%, very, very good profitability. There was no issue whatsoever to prevent from disproportional growth, and still the investment was zero investment. Okay, this is why I say this is nothing new, right? These 4 steps, and still huge mistakes are being made. Second, so you just assess an entire portfolio, you identify the stars, but you also saw all the rest of the portfolio. Afterwards, can I stretch the star brand? And for this, there are several methodologies. For this, we use this one. Either I stretch the brand with a new target, focusing on consumer, okay, expand the product usage into new targets with existing product, okay, or within this also, I can move not into this, but into a new category, okay, using new products. These are 2 very simple examples, all of which inside the same brand. Then we have another hypothesis, which is do both of them at the same time. The big difference between on the left side and on the right side is that on the left side, you have a higher brand linkage because at least either you have same product with a new consumer, right? Or you just enter in a new category, but already consumer knows what your brand is. So it's much easier. So higher brand linkage and lower risk versus on the right side, you do the 2 things at the same time. So much lower brand leakage and higher risk. New product, new consumer, much tougher to develop and much more expensive. So higher risk also. After you do the brand stretch, okay, you should know, okay, to where should I go to? Okay, which categories? And in this, we have three steps or 3 important criteria. One is, we call it size of price, okay? How big is that category? How much does it grow, that category? And here you have a Marimekko. I don't know if you are familiar with this type of chart. IQVIA use it quite a lot. And it is very visual and very helpful. So very easily you see, okay, these are the big ones. This seem for sure I'll make much more money on this. But secondly, this is not sufficient. I need to see if I do have the right to win on that category. And on this, very clearly, very important, do I have sufficient brand awareness and consideration? Do I have a brand fit with the category? Does the brand fit with that category or not? And then very important, and probably one of the most important, which is the product claims. At least we need to have parity claims, point of parity in claims. Obviously, it is much better to go with points of difference or superiority claims, as obviously. But if you don't even reach the parity of the market, then it is an issue because consumers, pharmacists, or doctors, you will not have anything superior to the other ones or even close. So it doesn't really make a big point. So very clearly, you need to have a point of differentiation in order to have the right to win. Still, both of them are not sufficient. At the end, you have entry barriers because it might be really big, amazing. Second, you might have the most amazing product, but still, if there is a very huge concentration in the market in 3-4 players, it's going to be tough to enter there, okay? Second, there might be business models that might be different from yours. So if you are completely consumer driven, and if the business model is doctor driven, you're going to have a very tough road ahead of you, okay? Because everything on the market is triggered by the existing business models. So it's going to be tougher. Also, you might have a lot of money, but if on that category specifically, which is really big, and you have a very nice right to win, if the investment levels are much higher than the ones that you are able to put it, it's going to be tough again. Also, and very important, it needs to have at least an average of a good profitability, because again, it doesn't make much sense to go there. And if it has a category with very small profitability, then it doesn't make much for your business. Another one is category innovation rhythm. For instance, in cosmetics and food supplements, you really need to have an innovation rhythm because it's very, very quick, the launches of new products, and then there might be other consumption triggers. So these 3 steps, and first, again, access the portfolio, find the stars. Secondly, how can I stretch? And 3, if I can, to which and with which criteria, basically help you setting up the base for afterwards to know exactly what should I do with the portfolio. Also, very important is, as much as possible, when you look into the brands, to see, and if you have a new product, and if you still don't have a vision for your portfolio, as much as possible, use the existing brands. And again, this is not new. I'm not showing rocket science, but again, these mistakes are made. Okay, there's no need to launch a completely different brand, which you will need to pay extra for gaining brand awareness, brand consideration, brand usage. This will take much more money out of you versus already using a brand that has this very nice base. Okay, so very clearly, as much as possible, the use of existing brands. Second, in vision. So we need to define the portfolio vision and set the priorities. So you have the assessment, full assessment, using very simple criteria such as sales growth, market share, profitability, brand size. You can use Bcg Matrix, which is a very common and well-known method. Somehow try to prioritize the brands for the next 5 years, not only where you are today, but what you want to reach on the next 5 years. And this mapping will help you with 2 very important things. Which brands will you bring innovation to, new products, okay? And secondly, which brands will have more investment versus the other. This just helps you to have a path, a very clear path for the future, and not fall in the traps or Trojan horses that somehow goes towards you, and it feels like amazing product, but after 2 or 3 years you get, maybe I should not have launched that, okay? Because it really changed my path. So very, very clearly to know what is your vision, and having in mind that this needs to have a perfect fit with the company mission. So in our case, in Angelini, we have very, very clear mission, which I will point out. We develop distinctive treatments for mental health conditions, epilepsy, rare diseases, and we have selective strengthening on leading position in consumer health. So it's pretty clear, okay? On consumer health, which are what we are talking about, we will invest selectively. So we will not go everywhere, just like Thomas told us. So you really need to have a perfect fit. If your company is a company that it is present in several countries, it is important to have a very perfect fit between local and this priority mapping and the company mission. So obviously at the end, you just build very nice vision with very beautiful words to inspire everybody in the company, both in inspiration, then measurable, and obviously with a deadline. Finally, the plan. And starting with the plan, you can start with the strategy and then moving to the plan. I was asked prior to today if I would talk about a little bit about investment. Basically, we have like four points important to define the investment. One, that you should put on the star brands and on the other brands. One, companies, availability, investment. Does the company right now, how much does it have to invest in the star brands, and how much will it be able to reinvest? Then brand priority. You already have from the prior steps what are the priorities. So very simply, start with the star brands. For sure, these will be the ones that you put more money to fuel and to get much more net sales. Obviously, coming from the BCG market, the Bcg Matrix, you will invest on the star brands, on the question mark brands, and on the cow brands. You will not invest on the other one. Third, category fair share. Somehow I've talked a little bit about this. It's just not, investment level should be not only taking into account what you have, but also a fair share between what you, your market share and the share of voice of share of investment that you want to achieve. And this should be a fair share as much as possible. Finally, brand profitability, as obviously, so this is pretty clear. You cannot invest more than what you will deliver afterwards in EBIT. So having this in mind, we will build the brand strategy with very common brand funnels. You will set up the priorities for the brand, and you will build a brand marketing plan that probably we will discuss in another moment. But also very important as this, the sales strategy. And you already saw from Alberto, the movement from almost one and pushing much more the other one. They are both very, very, very important. So the sales strategy and also the sales fundamentals. In which customers do I want to be? How will I be there? Which kind of negotiation will I do with those customers? With which kind of conditions, sales conditions? What will I do to be visible in that customer specifically? And how will I work the recommendation in the counter if it is a product that needs that? Okay, so very important, both of them. And obviously, this is continuously, it is key to have excellent execution in both these parts. So, and basically to finish, walk the talk. So sorry for brand A, brand B, and brand C. Basically, just in Angelini, just showing that by doing this, we really deliver disproportionate growth. So we have from August 19 to July 22 on Tantum Verde mouthwash, you see a very big growth, and we've just reached leadership. Okay, so very, very simple. Then brand B, Tantum Verde spray, we were already market leaders, and here huge growth again in just 3 years. Brand C, Momendol in Portugal, again huge growth, just by doing and focusing and put the right level of investment and doing the right type of investment and actions. Okay, very simply. Obviously, while doing this, we assume that some brands will decrease, obviously. Okay, but these ones definitely compensate the other ones. Okay, hope you like it. Hope it was valuable. And if you have any questions at the end, I'll be available, of course. Thank you.
Thank you, Bruno. I think it is very valuable at the time we are in. I believe the coming budget rounds will be focusing a little bit more on efficiency and focus and prioritization. So I think it was a great reminder, both of the presentations, that you just do the normal thing and switch on the TV. You have to really be cautious and be strategic. Now we are coming to the questions and answers, and I have already 2 questions from the audience on my screen here. Let me start with the question: what role do you believe will smaller regional companies play in the OTC market development? And this is a question for all speakers, but obviously we want to hear first from Thomas what he thinks.
Yeah, I think that refers back to the slide where I showed the growth of the leading corporations. I think it's an extremely interesting question. It includes smaller companies and regional companies. So smaller companies used to be more, let's say, faster in their go-to-market approaches. I think you would both agree, more nimble and reactive and responsive to market trends. Regional companies refers more to the fact that they have deep knowledge about the local market. Yeah, and that is sometimes a very big advantage over multinational companies who just have an affiliate and who obviously have a tendency to treat every country in the same way without taking into account the country specifics too much because of efficiencies, etc. Yeah. And I think in the past, what we have observed in the data from IQVIA is obviously that smaller regional companies are growing faster than multinational companies. So in the slide that I presented, we've seen a little turnaround to that picture explained by the rebound of the cough and cold category, where a lot of these multinationals are very strong. But I think one observation is that the very large multinational companies have really enhanced their go-to-market approach over the last couple of years. I think you would agree. Can you compete against a company like Heil or Procter & Gamble? Above the line marketing? Probably not, or most probably not. Yeah. But what we've seen that in the past, small regional players have gained their spot in specific categories with a very specific positioning of their product, with a very unique go-to-market approach, and so on. And if we look at innovation was very much brought by smaller companies into the market, not so much by the multinationals who have a much more complex approval process, etc., and who are obviously much more risk adverse compared to local players and smaller companies. But this has changed. I think one good example is the launch of Sequel from Procter & Gamble. I'm not sure how many of you know Sequel. Sequel is a very strange brand, ZZZQUIL. I think that's how it is spelled. So Sequel is a brand in the calm and sleep market, and it was one of the first products or brands which include melatonin as a new ingredient. And it was also brought to market with a very innovative form, which means a gum. Yeah, so like a gummy bear, basically, with melatonin. So it has an attractive new molecule for consumer health, or OTC, and it was an attractive new form to provide this to the consumers, and it was very, very successful in a number of markets. So this shows that the large multinationals have obviously learned how to bring new molecules, new products faster to market than in the past. Yeah. But the traditional answer would have been smaller regional companies definitely can bring innovation faster and can find their spot quicker. Sure.
And just to add also, small companies can have the ability to work much more as a startup. So not obviously the agility, but then the mindset to move quicker, to go, the ability to make mistakes and continue, surpass them. So all the mindset of a startup, it is obviously very, very has a lot of benefits to a company. So definitely this kind of more small companies have this ability also. And I've just now know, but priorly I worked in a regional company, family-owned company, and the challenge was for both me and my team was we need to be much more creative. So each time our spot on television or in digital appears, the creativity has to be much stronger in terms of insight, because we need to have a recall and a recognition much higher than all the other ones, because we will appear less. So this is in terms of creative side, this really it is a higher. The stakes are higher because you need to push this through with the investments that you do.
But I think, yes, I mean, for regional and smaller companies or local companies, something that is really key is specialization on something, focusing on something. I mean, broader portfolio are not bearable anymore. We are not like FMCG companies. We cannot handle 100 products at a time. So it's not only a matter of portfolio, but it's also a matter of business model. So if you want, we had in the recent past some local company that grew up constantly in the last years. And of course, I'm Italian, so I have Aboca just out of my door, because from Florence to Arezzo, where their headquarters are, is less than 100 kilometers. And they found 10 years ago, 15 years ago, they found the right way to build up, and they were really small. So they specialized their full portfolio on something, on natural ingredients, extract, whatever, and they follow a specific business model, only one target per time. So they focus all their efforts in terms of marketing activities, commercial activities on something that now they have the possibility to have several points of sales totally owned by themselves on the field. And they created something from scratch. So specialize yourself on something really strict and really focused, I think, is the key.
Very good answers. Thank you very much. I have the next question, is also a fundamental question for the future of our industry. How do you see the future business in the pharmacies versus mass market retail? Who wants to start? Perhaps you have the microphone.
I'm the last one, so a nice one. We saw in the last few years, especially during the COVID pandemic, that services are another very fundamental thing. In order to differentiate pharmacies, chain pharmacies or private pharmacies from mass market, it's not only a matter of sales convenience or to save money. Of course, this is key. This is fundamental for the majority of people in many markets. And we discussed about the importance of the e-commerce channel even yesterday. I mean, and even today for a country as big as Germany is. But I think that specialized services are really important in order to stand up. Otherwise, if you only consider the commercial activities and the commercial discounts, you are out of the market. I mean, in terms of if you have to compare mass market to private or smaller chains of pharmacies.
Fully agree. I would add also that I expect more and more pharmacies to become more experts in business and management, or managing their businesses, getting closer to big retail companies. So I expect negotiations to become tougher and tougher, because if not, again, building on your point, if a pharmacy doesn't really want and if a pharmacist doesn't really like to manage their business or to negotiate, you'll see that profile, that pharmacy profile, is not one that IQVIA will confirm or not, but it's typically not one that will drive growth. Okay, so it's not that typical profile. So more and more I expect pharmacy owners and pharmacy managers to become more and more experts in building their business, which can be tougher or easier in regards to the industry. I find that managing and negotiating with big chains, it is much easier and simpler, but that's just me.
Yeah, I would like to frame the question a little bit differently. I think there is also a legislative challenge behind it. So if we think that a lot of the growth that we are seeing in our industry, I mentioned the melatonin launches, are Rx to OTC launches. We're having new molecules which are becoming prescription free, but does not automatically mean that we can sell them everywhere. So we still have a lot of products which are pharmacy bound. So this is one thing. And the other thing is that all these major players in the consumer health industry, they have a very strong pharmacy business to defend. And if someone makes the first step to sell the products in the mass market, he's not getting a very positive response from his clients, which means the pharmacists, right? And we have some very prominent examples, especially in Germany, where companies try to launch a pharmacy product in the mass market and then have been driven into bankruptcy because the pharmacists have completely stopped doing business with them. And that is a big threat that I think motivates many pharma companies to stick to the pharmacy channel and to stay away from the mass market. Yeah.
Very good. Thank you very much. Before I open the question round here in the audience, I have one last one here from virtual audience, which I believe is also a very interesting one. Do you believe it's possible to launch a truly global brand in the OTC market today? It's for all speakers, and I answer it, no, you have to buy it. You cannot launch it. Who wants to pick them up?
Well, I believe so, but I'm almost sure it will be very, very expensive to do so, just like you told. So yes, I do believe it is possible, but definitely using, for instance, all the learnings that you got from your experience, it's going to be key to know exactly which levers will you use and you will push forward, so for sure you will not put everything unless it is a big multinational with a lot of cash just to invest, let's call it like that. But besides that, you really need to be very surgical and have the right levers to use. And sometimes, most probably, just like you saw, probably the first year, unless you get 50, 60, 70% of distribution, above the line is a question mark, definitely.
Yeah. For me, the clear answer is no. Just to be very direct, straightforward, because we are not selling washing powder or toilet paper, where the consumer's demand is very much the same across the globe. Yeah, but the consumer preferences for medicines and healthcare are very different. If you look at, for example, just continental Europe and the UK, who are no longer Europe, but they are very different. Yeah, for example, in Germany and Italy, we love phytopharmaceuticals. Yeah, we love herbals, natural ingredients, where there's UK, English people love chemical products. Yeah, and it's just 200 kilometers away or something. And there are huge differences. So having one global brand covering all these different consumer needs across China, US, etc. I mean, in China, we still have that very strong share of traditional Chinese medicine. These products are satisfying a completely different consumer need. You have products against bad winds. Yeah, so not really sellable in Europe. Yeah, but very different consumer needs. So I don't believe there will be one global brand. You will have brands covering Europe or the Americas, but not the full globe.
I don't discuss with IQVIA. Data driven.
Yeah, I totally agree with both of you. The right answer to this question is another question. How much do you have? Because I think that if you are a very big corporation and you can spend your money in several years and you don't care about margin, you don't care about profitability, and you can, rely on your potentialities, on your business, in your current business, and you have a lot of money to spend, maybe in a different category. So you are creating something that is not like a part of your current portfolio, as Procter & Gamble did with the kid, for instance, in many, many countries in Europe, like Germany, Spain, Italy, France, etc., or Novanite from Sanofi. But they spend a lot of money and they invested a lot of money, and we will see in maybe 1 or 2 years what they are going to do. Because of course the category is growing, other players are coming, both from international and national level. So you need time and you need a lot of money. So it's pretty much difficult. And I think that you have a clear slide on your presentation in order to see where is the opportunity. Under an existing brand, under a star brand, or a new brand? And the answer is pretty clear.
Very good. Do we have questions here in the room? Do you have the mic?
Thank you for all the presentations. They're very interesting. In fact, I was a bit reluctant to come here because my company, I have a small company in Poland, or medium-sized, let's say. We concentrate on RX products, so I was a bit reluctant to come here, but partly because I quite like to come to Berlin, but also I thought I might be able to benefit from the presentations and the meetings, even if it's concentrating on RX products. And I'm glad to see that there is quite a lot of overlap. So far, yeah, it's not a waste of time to come here. I have 2 questions, one very practical one for Alberto and one a slightly more theoretical one for Bruno. First of all, Alberto, you very interestingly described your business, the 2 parts of it, which is one is an OTX strategy, and the other one, I can't remember what it was, but it was more or less pure pharmacy.
You mean the FTM?
FTM, exactly, that's what I mean. So a very practical question is, you mentioned the case study of your IBD product as a good OTX product, which you can move to GPs.
Yeah.
But you also mentioned the case study of Prostamol, which you treat as a FTF. Oh, sorry, I can't remember your terminology. FTS products. My question is just a company like Berlin Chemie, will probably have quite strong presence in the urology market in terms of urologists. Why did you not treat Prostamol as an OTX product and promote to urologists?
A practical question and a practical answer. We do have different regulatory status across Europe. And for our Berlin Chemie countries, Prostamol is not a food supplement, but is a OTC, is a pure OTC, and they are covering this kind of targets in terms of medical. So what I showed you before is something more related with the Eastern European countries, where Prostamol is not Prostamol Uno. There is a different trademark and a different regulatory status, because Prostamol in all the Eastern European countries, Asia Pacific, and also META, Middle East, Turkey, and some countries of Africa, it's a food supplement. It's a pure food supplement. So we focus ourselves from a consumer point of view, even if in some of those countries, like for instance in Greece and even Italy, we didn't start from consumer, but we start with urologists and with some other specialists like urologists and even the GPs, in order to be much more reliable in comparison with other food supplements in the market.
Okay.
So this was the gap, or the difference between Eastern European country and all the other clusters.
Okay, thank you. The other question for Bruno, you made a very interesting presentation on portfolio analysis, which I think is certainly not restricted just to non-RX products. It can be, it is very general. And you mentioned critical mass and profitability and distribution and so on. But when you presented the BCG analysis, there you were only taking into account growth and market share. So where do you bring in the other criteria such as profitability? into that analysis?
I've pointed out, and you can use, and I've said you can use the BCG matrix, okay, but you can use as far as possible the prior 5 criteria that I put it, okay. So you can build whatever matrix you can do. If I was to recommend it, probably just the BCG matrix is not sufficient. Yeah. So we would need to do one crossing profitability also, and maybe it is not a matrix. It does need deepness in the matrix. So you probably need to have a third or a fourth criteria. This is why I've just put it. You can use this, and this. One example is BCG matrix. But to be fair, I would map with all the 5 criteria that I used before, on the very first slide.
Yeah, I agree. Plus maybe some other criteria.
Thank you very much. There were more questions.
Okay, Heidrun Gold from Fricke Group. I do have a question for Thomas with respect to sustainability. You have mentioned it on one of your slides, and I do see that the industry is following. The producers can do everything they can do to improve the carbon footprint. How do you see the push or pull from the consumer on sustainable products? On the product itself, it will be difficult because the ingredients is the most important to be healthy. But what can be done, let's say, on premier packaging, on secondary packaging, because this is difficult due to regulatory rules. And how do you see the future and what we can do to improve that situation for sustainable aspects?
Excellent, thank you. I think we have to distinguish between public relations and what companies and manufacturers are doing just to look good, and those things that really have an impact on the consumer. You mentioned packaging, you mentioned maybe organic ingredients, something like that for photos. Yes, I think that's part of the trend that we have seen, that consumers are seeking more natural ingredients. Has to do with sustainability a little bit. When it comes to how does that translate in on what is the importance of that trend? I have recently seen a study from our colleagues from IRI that products who are able to claim sustainability are growing 2.7 times faster than the rest of the products. So it has a significant impact on the purchasing behavior from consumers, and consumers recognize it and they value it. Yeah, so I think this is a trend where we are, as usual, a little bit behind fast-moving consumer goods, but it will come and it will become more important going forward. Yeah. Does that help? Good.
Are there more questions? Yep, we have one.
Thanks for the great presentations. For Thomas, you mentioned inflation in one of your note speakers. What can you say about the future of the recession and the likelihood of the impact on OTC? Have you conducted that analysis in your growth forecast and your value growth? I'm seeing CPI figures of 18% in UK as an example. And what would you think would be the impact to the M&A market as well? Thank you.
Well, I think we have to ask Christine Lagarde about future inflation in Europe, for example. But I agree that the likelihood is there that we will continue to see potentially double-digit inflation rates in the major European countries. I think I have presented that we see an impact on the consumer, obviously, on the available income. We see the impact on high-price products. We see an impact on the channel split between retail and online and cheaper e-pharmacies, yeah, who will potentially gain more share. And we are seeing that impact on products which are not so much for acute treatment. Yeah, so where you can sit and wait and say, okay, maybe I do not buy this 60 euros anti-age cream. Me not anyway, but the target group might think that maybe a 5 euro cream from the supermarket is sufficient if you have less money in your pocket. Yeah. On M&A, I think the impact is coming from the interest rates. Yeah, I mean, we have seen M&A ballyhoo, I would say, for the last 5 years, a lot of activity because money was cheap and it was very easy to borrow money and to purchase companies or assets. And this party maybe is over with increasing interest rates. So we will see a slowdown and we might see more targeted approaches in that space. Yeah. So that's maybe the answer. Hope that helps.
Very good. We have really finished at the minute on time, 11 o'clock.